The tariff war is triggering something deeper than trade disputes. It's a monetary power shift. With China's yuan weakening, US Treasury yields climbing, and Bitcoin's correlation to risk assets influx, global capital is starting to question where it's actually safe, and how this trade war could be the spark that accelerates Bitcoin's move to 1 million per coin. Let's mine deep. When Trump announced sweeping tariffs in early April, with some reaching 145% on Chinese goods, markets freaked out. Bitcoin dropped from 85,000 to 76,000 almost overnight. Then it bounced back. And honestly, by the time you're watching this, the policy might have already changed again. But beneath that volatility, something more permanent is shifting. China is letting their currency, the yuan, weaken. At the same time, they're unloading US treasuries and buying record amounts of gold, not for style points. And gold's been booming. During this entire trade standoff, it's the only asset hitting new all-time highs. That's not just about inflation. That's about trust breaking down. But let's talk about the confusion around tariffs. On first principle, tariffs are likely net deflationary. You slap a big tax on imports, prices go up, and consumers start pulling back. Demand drops, spending slows down, and in theory, inflation cools off. But that only works in a clean, low debt system. We're in the middle of a historic debt spiral where economic slowdowns can't be tolerated. If tariffs start choking growth, politicians don't just stand back and let the economy contract. They intervene, they print, they'll bail out the losers. When the money printer goes burr, fiat loses buying power. You know it, I know it, and more people are waking up. But in the US, most places don't accept Bitcoin yet. If you're stuck spending dollars, at least stop earning fiat rewards. The 2% Fold Bitcoin Rewards credit card lets you earn unlimited Bitcoin back on everyday purchases. Back in 2017, Trump also imposed aggressive tariffs, and it wrecked US soybean exports. China retaliated, and American farmers suffered. Within weeks, the government bailed them out with over $28 billion in subsidies. Fast forward to today, and even with new austerity efforts, federal spending hasn't slowed. The US is still bleeding dollars, running massive deficits, and weaponizing tariffs as a short-term solution to a long-term debt problem. And that's exactly why Ray Dalio is sounding the alarm.
And I'm worried about something worse than a recession if this isn't handled well. A recession is 2 negative quarters of GDP, and whether it goes slightly there, we always have those things. We have something that's much more profound. We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem.
So why should you care? Well, because all three of the major global superpowers have a massive debt problem, and austerity or tariffs aren't a long-term option when your country has 130% debt to GDP like the US, or 290% like China. Implementing tariffs is like suddenly going part-time with a 100K salary, right before your 250K of credit card debt is about to roll over to a higher interest rate. Thankfully for them, and unfortunately for you, governments and central banks don't have to tighten their bootstraps. They can simply issue new currency and devalue their old debt. This is the ultimate endgame for fiat currencies. The easy way out for governments and the hard way out for citizens, especially those who don't own any hard assets. And this is ultimately what Bitcoin solves: a functional currency and store of value that isn't trapped in a trade war or a fiat death spiral. A money that anyone can buy, store their value in, and take full self-custody of. The money printer will come back on. The only question is, will you be holding the asset it can't print? Now, we go backstage with Prince Philip of Serbia to talk about monarchy and money. We were talking about the Federal Reserve in the United States and how it started in 1913, and that was like the decline of the true hard money.
Correct. That Federal Reserve, pre-First World War, the reigning the prevalent system of governance in Europe and most parts of the world was monarchies. Post First World War, after the creation of central banking, there was a big push for democratic republicanism, and absolute monarchies were taken down to either constitutional monarchies with almost zero powers, or eradicated completely. Why? Because monarchies represented, absolute monarchies in their purest sense, have a very strong ethos on strong individual property rights, on private property rights. Civilization is born through individual strong private property rights, that if you are secure with your property, knowing that the state or the monarch is not going to take too much of it away, or through taxation, through anything, then you have the comfort and security that your assets will last the time. So that means that you will be able to then invest in yourself, in your family, have more children, and that will have ripple effects across the economy. Monarchs, their idea of how to survive into the ages for millennia from now is not to take too much from the people today. They need to leave enough for their children's and children's children for millennia to come. If they tax or take too much or infringe people's property rights, any sort of intervention, their position as a monarchy is questioned, and people can uprise. So they have to make strong, good decisions, not rash decisions, but decisions that will last the test of time, that their children and their children's children will have to bear as well. And that means that they were pre-First World War, pre-Federal Bank, Federal Reserve creation. They were more of a force to be reckoned with. They were protecting their own people, and so it was harder to be infiltrated with globalism and outside influences. Take that monarchy away and you have this open democratic republicanism or whatever it is, then it's open to corporate interests, to outside superpower interests, and all of a sudden the people are not protected by their monarch. And that's kind of the mess that we're in.
And I wanted to go back to like how the history of money in your country.
The dinar goes back quite a long way. I think the dinar was first created alongside, not too far away after the pound was created. But anyways, always backed by the gold. Even after the First World War, it was still backed by gold. There was still some sort of hard money standard, gold standard. After the First World War, we were still monarchy. We were still independent. We were also, then Yugoslavia was created, which was a shining example of how nations can get together and be glued by a monarchy with three different religions: Catholicism, Orthodoxy, and Islam, all together working side by side. And this was kind of a threat. So, but the dinar was working, functioning well, backed by gold. Then things happened after the Second World War, and the gold standard was taken off at the same time, and communism was brought in. My family were very much for hard money. My great-great-grandmother, King Peter I, was a known classical liberal, which at the time was actually quite progressive. But he saw that maybe the absolute monarchies might not have a place in the future, simply because of the threat that they imposed to the other New World orders. So he thought to say, okay, we can become a democracy, but with reduced limitations to the state. But the monarch has a big duty still. So it's like a parliamentary monarchy, but with more power given to the monarch, who acts as as someone who protects his people through defense, foreign policy, and also for unity and traditions, custom, family values, and so forth. He is the glue and the backbone of the country.